Morning, everybody. It is 9 o'clock. There are about 340 people that have joined so far, and it is still climbing. So I'll just wait a few more moments to see how the number stabilizes. There were about 1,000 people that did register, so we just need to give them a few more moments to come through before I start. All right, morning everybody, and welcome to this, another one of our PKF webinars. We're going to be looking at what we've called the ins and outs of SARS access to information, or the worrying phase that SARS now will start knowing more about you than maybe you knew about yourselves. I will deal with the presentation in probably 30 to 40 minutes of presentation, and in the background during the presentation, two of the tax partners from the PKF family will be on the webinar and will be monitoring the question and answer chat box that you have available to you to pose questions. Some of the questions they will answer during the course of the presentation. Some of the questions they will raise with me at the end of the presentation if they have sort of a general significance for many of the participants, and we will address those questions then as part of the webinar. The webinar will be taped, and the taping will be available for you to make use of at a later stage. The slides of the webinar will be sent to you after the webinar. And also for CPD purposes, there will both be a link in the question and answer session closer to the end of the webinar to ensure that you've attended, as well as sent out with a link so that you may answer the various questions to get your CPD points with, for instance, the South African Institute of Tax Practitioners site, as well as getting a CPD certificate for any other a registered controlling body. As with all of our webinars and seminars, we give the general disclaimer in terms of all of the various acronyms that are around, and remind you that this is inherently an information gathering exercise. It's not formal advice, and inherently in the nature of the type of questions that we might receive for this type of a webinar, we do need to be mindful that we are on an open webinar. While some SARS officials might have been barred from attending by their own commissioner, there are going to be some SARS officials who would have attended this webinar. There will be other officials from other regulators who might very well have attended the webinar. So one must be mindful in the manner in which one poses the question. Obviously, there won't be questions for you or yourself. There'll be for a friend, Mr. Alter Ego, for instance, who you want to find out information for in order that he might regularize his own affairs. And this is part of that process of gathering information. So we're in a very different world now. The world is fighting tax evasion. It's at the G7 level. The world body as a whole has run out of money. It's not only South Africa that's run out of money, and the world body is trying to make sure that there are effective tax gathering mechanisms. And so when we did a seminar, a physical seminar in those good old days when that's really all one did, around 2002, when the first amnesty was proposed and instituted by Commissioner Gordon, as he was then, he addressed a seminar of ours in Durban. And at that seminar, somebody stood up and said, you know, my name is Joe, I've got so much money overseas, I took it offshore as travel allowance and I've never paid any tax on any of it. And everybody had a great gasp and a sigh. But the world was different then. The purpose then was for people to regularize their assets by way of an amnesty. And the spirit in which that seminar was conducted with the commissioner is very different to the attitude of the commissioner now. We don't have an amnesty. We don't have a special voluntary disclosure program. We have a situation where we know that SARS and all of the world revenue authorities have greater access to information and will wish to use that information to gather greater taxes. And we are trying to ensure that our clients are aware of this changing world and what the implications are for them. Now, SARS has a new team. We're back to a strengthening of the South African Revenue Services and not the decay of the last few years where essentially all government departments were forced to dumb down in order that corruption could grow greater by those who wanted it to grow. So we now have Judge Dennis Davis retiring from the bench and joining SARS. When South Africa transformed itself, Dennis Davis was part of that initial team that worked with the Reserve Bank to ensure a transition from the old regime to the new regime. He's been part of the blood of change in this country for many, many years, and he's an exceptionally bright tax mind. He's an exceptionally bright mind in general. And so his focus is to ensure that the government fiscus gets all that it should do, and he is going to drive a new blood in SARS and ensuring that there is a greater focus on the wealthy South African taxpayers to pay their share of tax. And in essence, a lifestyle audit isn't a new tool that's been available to SARS, but it's going to have a greater focus. He is going to focus using data that's now more available to SARS. How many people earn the required level of taxable income to have the lifestyle that they have? That lifestyle is determined to some extent by where they live, what cars they drive, and what flash they show to the rest of the world. And he will now have greater access to get the troops in SARS to audit the right people and in the right manner. And the fancy car and the tax audits, the link has been there many, many times in the past. I had a client a few years ago who had more cars with more fancier names than I've ever heard of. And when I asked him, you know, why do you need 8 cars? I mean, there are only 7 days in the week. And you know, he looked blankly and he said, you know, is that the reason why I've got this horrible tax audit? You don't need to be a genius to work out the link between the fancy cars in the plural and the tax audit. Currently, I'm also dealing with another tax matter, and the link is very clear. It is a very expensive motor vehicle, and that's the link that has caused the audit. One of our very famous tax people, King, there was a number of cases that are emulated from him. And that whole process, according to urban legend, arose because he parked his fancy car at the steps of a country club on the same day that the commissioner was involved in a presentation at that club. And if one goes back in history, people who worked at SARS will tell you how the receivers of revenue, as they are called in those days, would write down the number plates of cars that cut in front of them and fancy cars that they emulated and would love to have. They've always been and will remain a trigger for a tax audit. But now the Commissioner has indicated that they're going to look at more databases than just the motor registration database. They're going to look at the property database, and we've seen those being the cause of some audits. We've also seen information on foreign exchange transactions being the cause of an audit. And we've also seen information regarding substantial amounts received from government by way of tender to companies being the cause of audits. Probably not enough focus on the tender income, but it is a database that is currently being manned by SARS. So the lifestyle audit has different permutations. The very integrated lifestyle audit will look at your net worth at the beginning of the tax year and your net worth at the end of the tax year, and see how much money did you need to invest in the growth of those assets. Compare that with your income, and if there's a gap after your expenses, it will say there's a problem with your reconciliation. That takes many, many man hours to do a reconciliation like that. But they have been done in the past, and I think we'll see more of these happening in the future. On the right-hand side of the screen is an actual query that was raised by SARS. And here they looked at the deposits, all the credit amounts in a bank account, and said, reconcile this to your gross income. Now, in this case, although the amounts look quite scary, there was no undisclosed income, because a transfer, for instance, from your current account to your call account would result in a credit that SARS would want a question about. And a transfer back from the call account to the current account would likewise generate a question that SARS would want an answer to. But you've merely moved money from your left hand to your right hand. There is no tax consequence in that transaction, but there is work to do to show that. But there are also instances where you might have sold assets and received a capital amount, and so that would be a reconciling item. There might be some insurance policies or endowments that come through. So it's not always that the unreconcilable amounts are going to cause you a problem. They might be explainable very clearly to SARS and not generate any taxable income. But this form of lifestyle audit is certainly going to become more common with the use of the mining of the bank data to see what is actually happening in the taxpayer's world. Now, the tax gap is the gap between what the economists feel the tax collections ought to be and what they are. At the time of the Tax Commission, around about 94, 95, that tax gap was estimated at 30 billion rand a year, and now it's sitting at about 100 billion rand a year. It's always fascinated me how one can estimate the tax gap and then have no real knowledge on where it's coming from. So one would have thought that in that process, the economists would have an idea of which industries or which sectors or where that tax gap really is. But it's a number that SARS will latch onto to say there is money out there that we need to find and that we need to raise. And some of that money is sitting offshore. That's part of the tax gap, because the money that's gone offshore, part of it would have gone offshore by virtue of an inflated expense or an inflated deduction in South Africa, which is the cause of a tax gap. And part of that income would be income that's offshore that has not been disclosed to SARS, and that would be another part of the tax gap. And so SARS is now in the process of analyzing the information that they have in respect of these foreign accounts and see whether or not all of that foreign income has been disclosed. So your friend, and that's the reason that you've come to this webinar, to find out some information for your friend, and your friend sat back at the time of that first amnesty and he said, I'm not paying 2% tax to rectify all of my past wrongs, and I'm not paying 5 or 10% of the value of my assets to regularize my foreign assets. It's too expensive, they said, and we don't trust SARS. Well, hindsight's an exact science. So we've seen that SARS was not vindictive over those who chose to do the amnesty. After much and much fighting, the professional bodies managed to organize a special VDP. And the purpose of that was to allow those who did not choose to do the first amnesty to regularize their assets. And of course, there was much toing and froing as to what the tax consequence of that SVDP would be. And at 16%, it is significantly more than the 2%, but still significantly less than the correct taxable income that ought to have been paid. And yet, unfortunately, many still did not regularize in the SVDP process. And now people are getting more and more worried. And really, if we look at things also, as far as the documentation that is required, in the amnesty period, the affidavit was a wonderful document that resolved most things, because the amnesty was done in the context that you received an amnesty for that which you disclosed, and you received no protection for that which you did not disclose. And so the affidavit was the ability to disclose documentation that was lost, that you had only a guesstimation of. And as far as the SVDP process was concerned, documentation became more of an issue, because that was part of a voluntary disclosure program where you needed to be full and frank in your disclosure. Now, if one makes a disclosure, it's in terms of the normal VDP process, and documentation is going to become even more of an issue. And certainly, as far as capital assets are concerned, the base cost will not be treated as softly as it was either in the amnesty or in the SVDP. There will be no rebasing of one's assets, and it is going to be a more costly process to do. And the reason why this is now a topic of discussion is because of the automatic exchange of information. Whenever you opened a foreign bank account, or purchased a foreign property, or invested on the foreign exchange market of some sort, you needed to show who you were. You needed to give some proof of your persona, and that was done generally with your South African Green Mamba passport. And that passport number can now be linked, goes back to your ID number, and that goes to your tax number, and from that somebody can work out whether you made disclosure or didn't make disclosure in your tax return. And now the banks are starting to ask more and more information with regards to the know their client and all the other acronyms that flow with that. But they want to know where you live. They want to know your tax number. And all of that information that they are seeking is so that they can ensure there's a smooth automatic exchange of information. And that's where some more nervousness starts to come again. And many, many countries have already signed and begun the first exchanges of information. I mean, even countries like Switzerland that refused to provide information after the Holocaust, when people were trying to find out about parents and grandparents' money that was in Switzerland, Switzerland, who had in their constitution that they would never disclose information, is part of the exchanges of information. All the other little countries that people run to, Hong Kong, Isle of Man, Luxembourg, Mauritius, the flavor of everybody's week, and the United Arab Emirates, the new flavor of the week, all of those countries have made disclosures of information and are in the process of doing first exchanges of information. And so far, South Africa has received 87 sets of information from foreign countries. And even if this whole automatic exchange of information comes to an end now and doesn't carry on any further, 87 sets of information is enough to keep our revenue service occupied for years and years to come, to sift through that, to tie that back up to tax returns. And non-disclosure means they've got a permanent access to your return. Some people got a letter in April from the new division that SARS created specifically for this. Welcome, you are a high net worth individual. We love you. We'll love you more. We'll visit you soon. And we hope that your affairs are in order. And Dennis Davis has said very, very strong things in the period prior to joining SARS, when the SVDP was running out. He said things like, we gave you an amnesty, we've given you an SVDP. If you choose not to do this, you know where you're going to be spending time walking around a 6x6 cell. So the view of SARS hierarchy is very clear. And yet, even with that, they are still opening the door to the VDP process in the midst of this automatic exchange of information. Now, I'm just going to raise transfer pricing because although the primary focus is on the individual, transfer pricing and the exchange of information country by country, company by company, will also trigger potential questions for corporate taxpayers. And the searching of the bank records can also find specific foreign exchange transactions exceeding 5 million rand by corporates, which could have meant that they needed to have a transfer pricing policy in place. So I just touch on that because the focus is primary individuals, but there is bilateral damage to companies if they too have not made disclosure of all of their cross-border transactions in the correct manner and with the correct transfer pricing issues being disclosed. Now, just like one thought that Switzerland would never give information, the buzz around cryptocurrencies was also that this was not a disclosable transaction, and these crypto exchanges would certainly hold their line and not provide information to SARS. Well, the line is crumbling because 3 of those major cryptocurrency exchanges have already had questions raised by SARS, and they've gone public to indicate that after taking advice, they have provided SARS with information that it requested. Now, we don't know specifically what was requested, and we don't know specifically how much information has been received, but that the process of obtaining information from the cryptocurrency exchanges, that is clear. There is a process in place to obtain such information. And remembering that at some point in time, you have to convert your crypto to a conventional currency in order to be able to use it in the real world. Many things can take place in the cyber world, but at some stage, things will come back to the real world. And when they do, that certainly will be a tax event, the sale of crypto to a conventional currency. And that will then potentially trigger a question mark, either with the bank making some disclosure going forward, or with you being required to make disclosure of that transaction. And so whilst this is not a crypto webinar, there are a number of crypto events that do give rise to tax consequences. So as I said, the sale of crypto to conventional is certainly an event that would give rise to a tax consideration. And the swapping of one crypto for another, in my opinion, would also give rise to a tax event. Although it may be more difficult to value, it certainly will be a tax event, a barter type transaction. And staking, which is the earning of some form of income from your crypto, would also give rise to some form of a tax event, probably not the same as a dividend or interest with the necessary exemptions thereto, but it is a form of income on the tree of the crypto. And certainly mining, where you use your computer to solve the various complex problems that generate crypto in turn, that is certainly a tax event. And then one's going to have the hardy annual of what is capital and what is revenue. So mining is clearly a revenue in nature, but the sale of crypto may be arguable as to whether it's capital or revenue. And then we have that whole debate that we had in the early days of the Kruger Rand, before it was sort of concretized into the capital gains tax legislation that this was a capital event. You have the whole question of, can you in truth have a capital asset where you don't earn any income from that asset? And so that is something that one has to give consideration to under the normal tax rules. So the VDP process is something that one must consider with all of these type of issues. Now, there are court cases that clearly say you can't go directly to SARS to deal with the undisclosed nature of income. One must do that in the correct form and the correct process through to the VDP unit directly and not to SARS in general. One of the key words in the voluntary disclosure program is voluntary. And there's going to be a lot of focus as to whether you're coming voluntarily and freely of your own will, or because there's a gun to your head that you're wanting to make the disclosure. Now, as far as the tax VDP is concerned, we do have some relatively clear rules. We know where we stand on penalties. We know where we stand on interest. In general, there will be interest. In general, penalties are capable of being waived if you meet the right conditions. However, in the case of intentional non-disclosure, there might be a penalty that would still remain even with the VDP. We also have to deal with the question of whether or not the application for VDP is before or after the notification of an audit. And we also have to give consideration as to whether a VDP has been applied for a similar non-disclosure in the past 5 years. But in general, the rules for tax VDP are quite clear. The only issue that remains is that of how far back must one go, because if there's non-disclosure, there's no defense of prescription. So the seed capital becomes an issue. Now, there are a number of issues that have tax consequences for all of the years that people may or may not have made disclosure of. A lot of these were very important when we did the first amnesty, because the laws had changed relatively soon before that. But now there have been other changes to the law, and these other matters would also give rise to potential income tax issues. So the remuneration issue was a big issue over this last year, because on the 1st of March 2020, the complete exemption came to an end, and we only have a 1.25 million exemption. And so this is something that we need to have a look at. And there are other issues that flow with the whole remunerational issue. There's the issue of ceasing tax residence, a very important issue, because when you ceased your tax residence, there's potentially a capital gains tax event that arose. And many people, in fact, ceased tax residency many years ago and never notified SARS because there was no consequence, but now there is. Your double taxation agreement might be the trigger for your ceasing tax residency, depending on where you live, how long you live there, whether that's your primary home, whether your wife and children have joined you. All of those things will need to be factored into account in looking at the tiebreaker provisions of a double taxation agreement and making the determination as to whether or not you have ceased your tax residency. Foreign exchange, likewise, has a number of issues that can give rise to problems. So the person who took their unspent travel allowance and left it offshore has a lurking problem from a foreign exchange perspective. Inheritances before 17th of March 1998 are issues. And there are various other issues that could give rise to a foreign exchange contravention. This regularization is not as clear as the income tax regularization because there aren't really defined rules. We know that the penalties can range between 10% and 40%, dependent on your frank verification, depending on the nature of the issue that you're looking to regularize, and depending on a number of other factors that aren't clearly set out in a form of legislation, because the regularization is a very different process with the Reserve Bank. And so one has the difficulty in knowing what to do and how to do it, but that's something one would need to take advice on. And at present, unfortunately, the Reserve Bank will not give a no-name process to at least see where you fit in that range of 10 to 40%. Now, over the last little while, SARS began a process of changing the nature of the criminal offences for non-compliance with the Tax Act. And one of those things that is a criminal offence is if you willfully submit a false statement under Chapter 4, and that in essence is a false submission of a tax return. And the return must contain the prescribed information by the Tax Act and be full and true. So the leaving off of foreign assets and the leaving off of foreign income would be, I guess one could say, a non-true tax return, which then leaves the problem whether this was done willfully or not, and whether or not it results in a criminal offense. The VDP gives you some level of protection, but the threat is there. And the change to that legislation relatively recently means that somebody at SARS wants to make use of those changed regulations. And we've also got, if you willfully or negligently don't provide the information which ought to have been disclosed, also falling within a criminal offense. So that would be in response to a query that's raised on your return. So now your friend has to give some serious consideration as to whether they're going to make disclosure or not make disclosure. The chances of there being another amnesty are more closer to nil than to 1%. So I wouldn't hold my breath for an amnesty. The chances for a special VDP are very, very low. The level of antagonism that the professional bodies faced when they raised the whole process a number of years ago with SARS was quite extreme. And so I don't see that happening very easily. So one has some issues that one really needs to give consideration to in the light of the automatic exchange of information. where SARS will have sufficient information to raise an estimated assessment, where SARS will soon have sufficient information to start arresting people and charging them with criminal offences. So your friend needs to give serious consideration as to how they want to proceed in this process. Now, I've had a few questions that were raised with me prior to the webinar, in the round up to the webinar, and I thought I'll address those questions first, and then I'll call on Alexa and Mohammed to see what else we need to address from the other questions. So the first question that I had was funds taken offshore with a discretionary allowance and property acquired offshore. And so one of the questions that arose out of this was whether when they took their funds in terms of the discretionary allowance, they clearly indicated they were taking this for investment purposes. Then those funds could quite legally remain offshore. If they took the discretionary allowance to use for travel, then there was an issue with the funds remaining offshore. And if a property was acquired offshore with funds that were legitimately taken offshore, that would be all in order. And if the property was not generating any rental income and was only used when the person went offshore on holiday, then that too would have no tax consequence. Another question that was raised was when a taxpayer stopped lodging tax returns because their income fell below a threshold. Now, if their income, including any foreign income, fell below the threshold and they didn't need to render a return, then if they now need to render a return, they shouldn't have to complete all of the back returns, but to the extent they do, there would be no undisclosed foreign income or other income, so there should be no penalties that would be imposable, especially as they had fallen below the threshold and weren't liable to do a return. However, they might be needing to do a tax return in order to ensure that SARS is well aware that they've ceased their tax residency. And this leads on to another question that was raised, where the question asked, well, my children emigrated in December 2004, and emigration is a very broad concept. So we need to focus on whether they formally ceased their tax residency, and if this was in 2004, whether they formally notified the Reserve Bank that they were ceasing a residency. If they didn't do this, and they merely got on the plane and left, then they had no problems until March 2020, when the new tax regime is applicable to remuneration earned offshore. So they need to regularize the fact that they ceased tax residency in 2004, and that can be done in their tax return. The process is now being dealt with through SARS. So with the professional assistance, their tax return can be completed and the necessary questions can be answered to cease tax residency. If that was in 2004, one would need to have a look as to whether or not there was a capital gain that arose on ceasing tax residency, and if so, a voluntary disclosure program process would be required. Now, having notified SARS of ceasing of tax residency, SARS will monitor that for 3 years, and if that is in order, then your retirement or pension fund assets can be remitted offshore in terms of the fact that you've ceased tax residency for 3 years. The last question that I got prior to the start of the webinar revolved around somebody who took the Amnesty in 2003 and owns 100% of a foreign company that's an investment company. Now, as I would understand matters, the income of that foreign company ought to have been disclosed going forward in terms of the Amnesty as income from a controlled foreign company, and as such would all have been imputed to the South African taxpayer And to the extent that there were any foreign taxes, which in this case, I don't believe there were because it wasn't a tax-free jurisdiction, then there would be some relief for any foreign taxes paid. But the income of that controlled foreign company would be imputed to the taxpayer. And so there's no need for that foreign company to be registered as a South African taxpayer because the income is already imputed by virtue of the controlled foreign company rules. So let's look at the questions. Maybe Alexa and Mohammed, if there are any questions that you think I should look at, otherwise I will look down the open questions. All right, let me deal with the open questions in a moment. So the 1 million rand discretionary foreign exchange allowance. So the discretionary foreign exchange allowance can remain offshore, except to the extent that you tick the block and say, I'm using this as part of my travel allowance, and I'm going to use those funds in terms of flying on this flight on this date. When you do that, you need to bring the funds back when your flight is over. But if you tick the box that you are using the discretionary allowance for investment and you put that as a reason, then the funds can remain offshore. I see Alexa's on the videos on, so let her address some of the other questions that we should deal with. You're still on mute, Alexa.
Good morning, everyone. Maybe as a start-off question, one of the queries we received is, as a South African living in the UK, tax resident in the UK, can SARS tax my UK income? And Paul, I don't know if you have any additional comments in that regard. What we said is that if you are a tax resident in the UK, SARS shouldn't have any taxing rights in respect of your UK sourced income. However, what is quite important is to make sure that you cannot also be regarded as tax resident in South Africa. And that if you cease to be tax resident in South Africa, that you attended to the necessary steps to record that with SARS and to pay your exit taxes. And then as a second aspect which should be considered is just if you are regarded as possibly tax resident in both the UK and South Africa, whether the double tax agreement would apply to make sure that you are exclusively tax resident in a certain jurisdiction. So there's quite a bit to consider in addition to just saying I am tax resident in the UK and I shouldn't be paying South African income tax on my worldwide income. Paul, do you maybe have anything to add to that?
No, I think you've addressed that fully. I think the important thing is that they must have notified SARS that they ceased tax residency and dealt with the exit taxes that arose when that event. And I think that's the part that many people haven't done. They've become effectively tax resident by virtue of the double taxation agreement, by the length of stay, by the setting up of the home, by their children and their wife moving there, by the cat moving there, by all of those things happening. They've become a tax resident in terms of the double taxation agreement, but they haven't done the step of notifying SARS. And I think that's the big problem that we have with many of these cases.
Yes, and then I think linking with that, I see one of the questions we've just received is for someone who ceased tax residency historically, is it still necessary to disclose all income on their South African tax returns? Or should they only disclose their SA sourced revenue like rental income and capital gain on immovable property? And I think this participant is correct when they say, my understanding is that such taxpayer will not need to disclose their worldwide revenue and capital gains in respect of the foreign country. But I think that comes back to the consideration of that is correct. If you are not tax resident in South Africa, you do not need to declare your foreign income and foreign capital gains in South Africa. However, it is very important to ensure that you are correctly on record with SARS and not regarded as tax residents in South Africa.
Yes, that is correct. They do need to make that disclosure process, and once that disclosure process is in place, then they only have to deal with the issue of their South African sourced income. And the one issue that one must always remember with that is if there's a distribution from a trust, a South African trust, then the normal flow through works for revenue, but it doesn't work for capital gains. So if there's a capital gain, the trustees of that trust need to pay the income tax on the capital gain at trust level. That doesn't flow through to the non-South African tax resident beneficiary. So that's the only one little trigger that's different under the normal circumstances that people sometimes do forget.
Okay, and I think maybe linked to that query, and I'll pass over to Mohammed shortly, is a very interesting question, which I think procedurally there are many answers to. SARS has what seems to be a few methods to declare the manner in which you cease to be tax resident. On the tax return, in an immigration tax clearance, as well as the new declaration form, which has been made available on the SARS website. And the question is, when would you use which method? And I think it's a very, very topical question at the moment, because there is quite a bit of uncertainty, especially in respect of people that historically cease to be tax resident. And I think SARS will, as more and more people opt to go through these procedures, provide more clarity going forward. But at this stage, there is quite a bit of uncertainty. I think to be prudent, it would be wise to do the tick box on your tax return, as well as do the declaration at the same time by submitting that to SARS to make sure that you cross as many methods of notifying SARS as possible off your list and make sure that you have what is necessary at SARS. And then in addition, if the immigration tax clearance is required, that additional process is also available to make it as clear as possible to SARS that you've lost your tax residence. Paul, I don't know if you have any specific practical experience that you want to share in that regard.
I understand that the new tax return for individuals that will be released early in July, it makes additional processes for this. It's been raised by the professional bodies. And I do believe that the new return would have a bit more information that will be required with the date of when you cease residency to try to deal with the back periods. But the key issue would be if there is a VDP that's required because you didn't deal with the exit tax, that's the first methodology that you'd need to notify SARS. And then I think you're quite correct. As many of the other channels as one can use, one should use until such time as one has the clarity. I would just wait a little longer to get this new tax return out in order to deal with that, because that might be the simpler method, other than those people who have to do a VDP. I think that somebody is going to be putting up the questions for the CPD onto the question and answer as a link shortly, so that you can deal with answering those questions for your CPD, because we're now more than 40 minutes into the webinar, and you've attended the bulk of the webinar, so the questions and answers should be up on the questions answered for you to be able to answer, but will also be circulated again with the slides later today or tomorrow. Are there any other questions that need to be addressed? I think there are a lot of questions which we're probably not going to be able to answer all on this webinar, but are there any others that you've answered specifically and that we must have a look at?
Hi, Paul. I think, yeah, there's just maybe one other question that has come about, or more of a statement from one of the attendees. Yes, just to answer the question is that as part of the high net worth individuals unit that has been formed at SARS, what you would find is that the recent portfolio committee presentation by the Commissioner for SARS, he has made reference to about 65 cases that has been handed over to the National Prosecuting Authority Specialized Tax Unit for prosecution with regards to corruption matters. So just to answer your question is that I think, the attendee is asking whether, they are tackling corruption cases. It seems from this particular report that, SARS is addressing corruption matters across the board. So definitely we are seeing that taking shape in some form or the other.
Yes, I think the one issue with a tax matter is, firstly, there's the whole issue of the secrecy provision. So SARS can't go and put that out into the public frame that they're dealing with this matter that arose from corruption. So it will be quite a while before one actually hears about those cases. And in many cases, you won't hear about them, because if the matter is resolved in the investigation process or the matter is resolved in the tax court process, that's all without any names being known. It's only if it goes further, if there's an application to defend maybe assets being blocked or assets being forfeited and things like that, that it will come into a public domain. But generally, a lot of these will take place behind the scenes, and that's in terms of the secrecy rules that we all need to have for tax legislation. So, yeah, I see there are other questions on this high net worth department and whether or not it's going to look at corruption and government families as well. And look, one doesn't know what the answers to all of those type of questions will be. One hopes that these things are on an even-handed basis. But that's a difficult thing to do. I think people like Dennis Davis are principled and will try to deal with it on a principled basis. I think the Commissioner has tried to show that he's different from his predecessor and is looking at the nature and role of a Commissioner of SARS as a non-governmental independent person to bring in the maximum for the fiscus. So time is really there for us to see what actually happens. Any other questions, Mohammed, that you had to look at?
No, there's only one other one with regards to the issue with the 1 million rand threshold for certain investment, and how tightly will SARS monitor and police this particular threshold. I think, again, to just answer that question for the participant is that, look, SARS in their administration is revitalizing and regathering a lot of new processes. They're putting a lot of systems into place in order to monitor and police a lot of their strategic priorities for the current financial year. So with that said, you're going to find that policing the 1 million rand threshold that you referred to will take some form of momentum, and if they see more and more taxpayers making use of this, they'll start putting more emphasis to put more policing on it in the form of a general inquiry, audit, or investigation. So definitely what we're also seeing is in the current year is that all the initiatives that have been put in place or are being put in place from a SARS perspective are taking different forms and shape in terms of priority, urgency, and or what gets executed first and what gets executed second. So yeah, that's basically the trend. I think it will speed up going into the next financial year, but it's a start of rebuilding what SARS lost previously.
Okay. Thanks, Mohammed. A couple of other questions that I've seen. If you worked overseas, then your funds could stay overseas. You haven't committed any foreign exchange violations. And if there were no interest or any income on those funds offshore, then there's no income non-disclosure. So in that sort of case, there's no need for a voluntary disclosure program. It's only if you start to invest those funds offshore and they generate interest or other income that you'd need to make a disclosure of that. And I think this other question is also very important. Person left South Africa in 1993. They were registered with SARS as a taxpayer, lives offshore. Do they still need to tax emigrate? Yes, they do need to do a process to make sure that SARS is aware that they've ceased residency, because ultimately, when it comes to the inheritance of the foreign, your estate and those funds being remitted offshore, then they will need to have that clearly in place. Whilst they can do it at a later stage, it's best to do all these things now and have them dealt with. So there are some regularizations that would need to happen in that. Crypto statements and statements on cryptocurrency, yes, they may be very difficult for people to understand exactly what there is there, but somebody will be able to work out when you took an amount of rands. Your first step is to take it to some form of an exchange, probably to convert it into Bitcoin. Then from Bitcoin, you can move that from one exchange to another exchange and buy another form of cryptocurrency. It gets a little murkier after that. But in the end of the day, you're going to bring those funds back to South Africa. So there's a trigger when you bought the you bought the cryptocurrency, and there's a trigger when you reconverted that to rands. And those two triggers can cause the questions. Thereafter, you've got the onus to show what you did with those funds. And if you can't, then some form of reasonable estimate will be taken by SARS to estimate your taxable income. So however difficult it is, you'll suddenly find that you are able to understand the cryptocurrency and show that there were no movements or no transactions. That is what you're going to have to be able to show to SARS to show there was no further tax event. Ago, and so those questions are the generic questions that we have answered, and those come back to what disclosure did you make of your ceasing of residency. And the importance of that is, if you didn't make that disclosure, you've potentially got this capital gain on ceasing residency, and you've potentially got the issue with your foreign remuneration not being fully exempt. So those two issues are at least enough to say, I need to regularize, I need to close that chapter properly. And that's the process that we would go through. So I think we are nearing the end. Alexa, is there a question that you've got to raise, or?
I think a very good question, which I don't necessarily have the answer to, is what will be the consequences of POPI in relation to SARS's ability to access third-party information. And the question is specifically raised in the context of SARS approaching crypto platforms to obtain information in relation to non-compliant taxpayers. And I think there's still quite a bit to be developed in that regard. SARS's access to third-party information is quite wide, and I'm not sure to what extent POPI will be able to impact that, given the reason why SARS needs to gather this information. Paul, I don't know if you have any concluding comments on that.
I think you're correct that SARS will trump POPI. The national interest to raise tax will trump the private interest of your own individual information. So, I mean, it's applicable on all of these things. Your employer provides an IP5 to you and to SARS. The bank provides an IT3 certificate to you and to SARS, and the cryptocurrency will be required to provide a similar form of information. So that will not be blocked by POPI. I think it will be protected, that it can't just be put onto the SARS website that Mr. or Mrs. X earns so much money. That's the level of protection that you'll have. But the disclosure, I don't think that will be a workaround for that. So I thank everybody for asking all these questions. I think we've tried to address the broader questions. I think we've opened the door for you to say, contact one of the three of us who've been on this webinar, who and or anyone from the other offices of PKF around the country, because we're just a representative sample of the tax people. You've seen other of us on the budget, post-budget presentation, and you'll see others of us on other webinars that we will present in the future. So I thank you all. I hope you all have learned something from this, and that you will all complete your CPD as required by your professional bodies to get some benefit from this. So not only will your friend who needs this information benefit, but you too will benefit by the CPD that you've got. I thank you all for your attendance, and I wish you well and keep safe out there.